So guys, today we're going to put on our detective hat and we're going to solve the mystery of the moving Australian dollar. Hey guys, Akil Stokes here and welcome back to another bonus episode of the Trading Coach podcast. I call it a bonus episode because typically I release these episodes every Monday, Wednesday, and Friday, both on your favorite podcasting app and the video episodes here on YouTube. But today I wanted to hop in and jump on the mic and share something special with you because, well, we've been doing a lot of fundamental episodes lately, kind of educating you guys on the basics of fundamental analysis and what's happening in the market. And honestly, today gave us the perfect example of why understanding that type of stuff matters. Because, well, as mentioned before, we had a pretty mysterious move today. And after digging into it, I finally figured out exactly what happened. So let's talk about it. This morning, during my normal top-down analysis, which I do every morning before I hop into the charts and trade, I noticed something very interesting. Pretty much as I went through my portfolio, I noticed that every single one of the Aussie crosses had some pretty significant movement on it. And if you go back to the weekend preview, we knew that Australia had some news coming out. We had monetary policy meeting minutes come out on Monday night, right? Monday night, Tuesday morning, depending on where you're at. We know that we have jobs numbers coming out in about 4.5 hours later on tonight. But there was nothing that I had in my notes scheduled for Tuesday. So it was very interesting to see all this movement on Wednesday. So naturally, the first thing that I did was assume that I just missed it, right? I do a lot of things and it's not uncommon for me to forget something, especially on the fundamental side, which honestly isn't as important as the technical side. But after checking my notes and rechecking the economic calendars, there was nothing that was really there. So, like any good detective, and I really wish I had my detective hat with me right now. I have no idea where it's at. I thought I had it in my room here somewhere, but I must have loaned it out or lost it at a random costume party that I went to. But like any great detective, I went hunting for answers. As mentioned earlier, I had already checked the economic calendars, nothing there. So next up was making the rounds around my usual news sources, nothing there. And basically, because time was kind of getting away from me and I had to get kids breakfast and lunch made and prep for the live room, I decided to give up and say, all right, well, maybe it's one of those random things that the market does. After all, the market can do whatever the hell it wants whenever it wants to do it. So the market is just feeling movie today for some reason. Now, for you guys that know me, it's really, really hard for me to give up. Once I have a question that is tickling the brain, I need to keep looking and searching until I find that answer. So that's exactly what I did. Later on in the day, perhaps even during an important meeting that I should have been paying more attention at, but wasn't because I was searching on my phone for answers, I did some more reading and I finally was able to connect the dots. So apparently, late Tuesday night, at least late my time as someone who goes to bed pretty early, President Trump made some comments about the U.S.-Iran situation, the geopolitical situation, right? The war, saying that the conflict was at, and I quote, in its final stages of peace talks. And immediately a light bulb went off in my head. And I'm actually surprised that we haven't talked about this before. So recently we've been talking a lot about the relationship between geopolitical tension, war, specifically how pro-war headlines and the uncertainty that comes with that. So like war is continuing, war on, that tends to strengthen the dollar, while peace talks, war may be ending, tends to weaken it. But what I never thought to explain to you guys was how this doesn't just affect the US dollar, we can throw gold in there as well, but it impacts other currencies and other assets as well. And one of the biggest currencies affected by these shifts in market sentiment is, can you guess? Yep, the Australian dollar, right? So let's try to simplify this much as possible. As a fellow small-brained individual who understands simple terms rather than fancy stuff that confuses you, I do think this is something that is important for every trader to understand. So in the markets, there is something called risk on and risk off sentiment. And here's what that means. When investors are in a risk-off environment, I gotta be very careful that I don't mix these up. They become more cautious, right? Risk is off. If this was being risky and this was an investor, they jump off of it. They don't want to be risky, right? That's a horrible explanation, but I hope it makes sense. Essentially, what that means is that they are being more cautious, right? They want safety, they want stability. They're less interested in aggressive investments and more interested in things that will protect their money. That means that capital tends to flow to what are called safe haven assets. Now, if you want a deeper breakdown of safe haven assets, right, check out Trading Coach Podcast episode 1281 or a YouTube video I think is titled The Best Safe Haven Assets in 2026. I'll link it at the end in the little pop-up box thing, but I'll put it in the show notes below if you want to see it. But spoiler alert, one of the biggest safe haven assets in the world is the US dollar. So when there is war and people are uncertain because of war or geopolitical tensions or just general fear in the markets, investors naturally move into the US dollar because it's considered to be safer, or at least not as bad as everything else. So that's your risk-off behavior. Risk on is the exact opposite. I'm not going to pull out a card, but I'm going to pull out a card, right? If this is risk on is when traders, boom, they want to jump on the risk and be on it. Jump on it, jump on it, jump on it, jump on it. Yeah. Anyway, dancing aside, this is when investors start to feel more optimistic, they feel more confident, and they're more willing to take a chance, take a risk with their money. And historically, one of the currencies that benefits most from this risk-on view is the Australian dollar. Now, I know what you're wondering. Akil, why the Aussie? Well, because I've heard from the Australian traders that I work with, everything down there is bigger and poisonous. So, yeah, much more risky. Or, and I hope not to offend, again, my Aussie trading friends have told me that. I've never been to Australia, and I never will because of that reason. But that's what I've been told, so don't at me if I'm wrong here. I don't want to offend. The internet is so sensitive. But aside from that, which may or may not be true, it's actually kind of simple, right? Or at least I'll keep it simple for you. Australia is heavily tied to commodities and very heavily tied to global trade. It's also China's biggest trading partner. So in many ways, buying or investing in the Australian dollar gives investors kind of, an indirect exposure to both global growth and to Chinese economic activity without needing to directly invest in the Chinese markets, which can sometimes be a little bit difficult because of liquidity or lack of liquidity and other currency restrictions. So when investors are optimistic about those other things, the Australian dollar tends to perform well. Now, the next thing you're probably wondering about is, okay, well, why the hell does money moving out of the dollar, how does that necessarily benefit the Australian dollar? Well, another thing that beginner traders often misunderstand is really how money works in the market. You see, when money moves in the market, investors usually don't pull their money completely out of one asset and stick it under a mattress, right? And taking your money out, there's a lot of tax repercussions that come with that and blah, 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 blah. But instead, they tend to rotate it or roll it over or pretty much just shift from one investment to another, right? It's kind of like a scale or a teeter-totter, right? When they take it out of one, this goes down and the other one goes up. It would be the opposite. I guess when you take it out of one, it would go down because it gets lighter, and you put it in the other one and that goes up. No, that one goes down. I don't know, whatever. You figure that part out. But it's like a scale. It's a balancing act. It shifts from one to the other. So when traders start feeling more optimistic because of peace talk headlines, money begins flowing out of the safe haven assets and into the riskier assets. And to put that into even simpler terms, that means less demand for US dollar, more demand for Australian dollar. And the cool thing about Forex trading is we actually have a chart that will show you the comparison between the two, the Aussie dollar. Anyway, that's why we saw the Aussie explode higher during Wednesday's session, and it actually ended the day as the strongest currency in the market, with its little sister, the Kiwi, right behind it. Now, later in the day, there was more fuel added to the fire. We saw a whole bunch of other things that influenced the market. We had, Treasury yields dropping. We had oil dropping. We got the release of the FOMC minutes from our last monetary policy decision, new Fed chair and all that fun stuff as well. But we'll save that for another day. But as far as the mysterious movement of the Aussie dollar goes, we're safe to say, mystery solved. So I hope you guys enjoyed this video. Seriously, thank you for all the positive feedback you've been giving during these fundamental breakdowns. Again, we're trying something new here, something that's a little bit more outside of my comfort zone, but something I really enjoy talking about, especially since apparently I have the gift of simplifying the things that are complicated. But it has been a blast to make these videos. It's been cool for you guys. It's cool for me as well because it holds me accountable and gets me more knowledgeable about what's happening out there in the market. Anyway, as long as you guys keep enjoying them and as long as they keep giving you value, I will keep doing them. And until next time, plan to trade, trade your plan, and I'll see you guys in the next episode.